If you've been seeing people arguing in the comments about the benefits between an S Corp versus an LLC, and you felt like you needed a law degree, a CPA, and maybe a glass of wine, I get it. Hey, I'm Nikita, finance strategist at Collective, and today we're breaking down the key differences between an S Corp election and the single-member LLC to help you decide which may be the right fit for your business. And I promise to keep it simple, no jargon overload. But before we get too deeply into it, one important thing to remember about taxes is that there's rarely a one-size-fits-all answer. The same is true for an S Corp or LLC. The right tax structure depends on your growth goals, how long you want to be self-employed, if you're running a casual side hustle, or you're quitting the corporate world and not looking back. The goal here is to understand the basics so that you can decide what makes the most sense for you and your goals. Speaking of basics, let's start there. An LLC stands for Limited Liability Company, a legal entity formed with your state. And an S Corporation, S Corp, is actually a special IRS tax election that tells the IRS how you want your business activity to be taxed. So actually, you can exist as both an LLC, your legal structure. Underneath that gives you liability protection and a tax ID, with an S Corp election on top for a chance at better tax treatment. LLCs and LLCs with S Corp elections have a few similarities. They both start the same way. Both start as legal structures formed at the state level. An LLC is a legal entity that gives you a legal business name and tax ID, while an S Corp is a tax election an LLC can make with the IRS. Both help protect your personal assets. Because the business is an LLC, there's a legal separation between you and the business, which can help shield your personal assets when the business takes on risk or legal obligations. Both use pass-through taxation. Whether your LLC is taxed on your personal return or you've elected S Corp status, income from the business flows through to the owner's personal tax return, avoiding the dreaded double taxation of a corporation. Both require ongoing state maintenance. The LLC must file an annual report, they have to maintain a registered agent, pay state fees, and keep state records up to date. LLCs are usually pretty easy to set up. They're flexible and beginner-friendly. Many people start here, and honestly, that can be a great first move, especially because it's the first step toward electing S Corp status. By default, a single-member LLC is taxed like a sole proprietor, which means the IRS treats the business and the owner as one for tax purposes. Business income and expenses are reported directly on your personal tax return, and you pay income tax in addition to self-employment tax on the profits. So, if LLCs are so easy, why don't all solopreneurs just do that and move on? Well, the big downside to LLCs is that once profits grow, self-employment tax can get pretty expensive. That's our perfect segue into making an S Corp election. And this is where folks can get confused. Listen, y'all, if you only retain one thing I say, make it this. An S Corp is not a business entity. It's a tax election. That means you can't rush to an online formation company and form an S Corp the same way you'd form an LLC. You elect S Corp status with the IRS, usually on top of an LLC. Most people start to explore the S Corp election to save on self-employment tax. Here's how it works. You make the S Corp election. You pay yourself a reasonable salary, run through a formal payroll process. That salary is subject to payroll taxes, Social Security and Medicare taxes, the same as self-employment tax. You only pay income tax. This is where the savings come from. The S Corp election gives you a chance to mitigate a portion of your self-employment tax. But S Corps, they're not without their challenges. One of the biggest being the extra administrative work that costs both time and money to keep up with. First, a formal payroll process needs to be in place to meet the reasonable salary requirement, which brings quarterly and annual payroll tax returns. You'll also need to file a separate annual business tax return, which relies on more formal financial statements. So comprehensive bookkeeping becomes more important, aka your Excel spreadsheet might not cut it anymore. By the way, if you're still with me, go ahead and hit that subscribe button while it's fresh on your mind and give this video a like. Now, you know the difference between a single member LLC and an S Corp election. But the most important question is, how do you decide which is the right fit for your business? Here's how I like to think about it. Consider an LLC if you're new to the business world or you're testing out a side hustle. You want flexibility, your income is on the lower end or inconsistent, and if you'd like less paperwork. Consider adding the S Corp election if you're committed to your self-employed business for at least 2 years. Your business is growing and or consistently profitable. You're making enough to justify the extra admin costs, and you want a chance to reduce self-employment taxes. Generally, for people looking for a savings advantage, an S Corp election makes sense when the tax savings outweigh the added costs and complexity. If you save $2,000 in taxes but spend $3,000 on payroll and accounting, well, that's just math that ain't mathing. My team at Collective can help you understand the numbers, and if you aren't sure, we can help run those for you. And if the numbers do make sense, but you just can't stand the thought of having to manage the ongoing admin that I talked about, no worries, we can handle that too. Just click the link down in the description to set up a call with my team. So, here's the takeaway. LLCs can give simplicity, but potentially higher tax bills, while S Corp elections trigger more complexity, but open the door to optimize your tax structure. Neither is better, they're both just tools. The right tool depends on where your business is and where you'd like it to go. If this helped, be sure to hit that like button, subscribe, and drop your questions in the comments below if you're still curious or confused about anything that we talked about. And remember, the best structure is the one that actually fits your business, not the one that TikTok told you to get. I'll see y'all next time.